Greetings and welcome to today's case study. Today we are going to do a case study on GBPUSD. So as you can see, we on the chart we are on the 15 minutes time frame. That was the time frame we took most of the trade. But I'll go up to a higher time frame to show you what the chart looks like and why we took some of this trade for a point of interest. So we'll go to the 4 hours time frame. Now, this is the 4 hours time frame. We've had this drop, then we've rallied up to the upside. We've had this other drop. Now we had a pullback, the discount of this zone, discount of this zone. Okay. The discount of this mid like middle time frame structure. We've gone to the discount. If we take this whole swing point, we are we've gone to the discount too. We've gotten to the discount of it. Now, before we got to this point, market did something. Market swept this high time frame liquidity here. As it swept it, we then had a change of character on the lower time frame before we started heading to the upside, the having a pullback to the upside, then coming into the discount zone. Now zoom in here a little. So this is what the structure looks like. This is a daily supply, and the daily supply back to back. So I will go down to 15 minutes to show you some of the charts and how it took. I'll do some of the entry. So this is the 15 minutes time frame. This is where liquidity we swept on the higher time frame. Then when we swept that liquidity, had a change of character here. Had a change of character here. First started running to the upside. For this case study, we are going to do analysis on several trades. 1, 2, 3, 4, 5. So I will start with this one. So we see everything that happened part of the trade. Now let me zoom in. Now this is the low that the market swept on the 4 hours, like I showed you earlier. Now after market swept this low, they now had a change of character. So market took out this low, came up with it, but then we changed character. In other words, we can see that we changed character here, but here now, the market broke this low and changed character. But why I specifically went for this one is because there was a candle closure. That's I had an option to shoot down. That's why I chose this one. So after we took out this high, market rallied to the upside. Market rallied to the upside. Go to this period. It left some inducement here. There's some inducement here below. And what it did is that then came down like in a couple of minutes, came down and mitigated this 15 minutes demand. Now this particular place where to this one now is the refinement and the 5 minutes. So market used all these places, this low and this Asian low as inducement to mitigate this refined demand zone. That was mitigated it and moved up immediately, going up to this swing high here, this trend swing high. So I'll go to a lower time to show what happened. Now this is what the 5 minutes looks like. I will zoom into the chart to show you what that's going to. So this is it. Markets, like I said, the market went to the upside, came down, used all this area as to mitigate it. Now, what it mitigated is inside bar demand. And some of my previous videos have mentioned about inside bar point of entry. Mentioned about inside bar point of entry. So, and this one is one of them. There's an inside bar demand that 3 minutes point of entry. So that was what the market indicated and started moving. They moved there and moved up to this trend swing high here. Giving us a total trade of 1 is to 28. 1 is to 28 for this particular 1 is to 28 for it. So assuming we continue with our initial plan targeting to this higher time frame, there's this daily supply zone here. What we'll have as our total trade should be let's see, that 1 is to 56. 1 is to 56. So we'll just stop it at this internal swing high here. Internal swing high. That's very, I would just say that's very much okay. But if we wanted to hold on then we'll take it up to this high time frame supply zone, you know, the total trade of 1 is to 6. But for this one, here we start this 1 is to 28 next to the reward ratio. And as you can see, this entry is just a very clean entry. Very clean entry, nothing complicated. You just look at the chart once, you'll be able to see the price action. You could change the character and point of this week of now, if you look closely here, you can see that we had it also had a little change of character here, but it was not that visible. So we are around. So markets took out this high. At this. That show. Okay, this other one. We took out this high. Then it came down to it. They did the refinement. This particular one, I marked it the refinement. If we are to go with this whole zone, if we go to it with this whole zone, what it will be, let's see what it will be. Give us a total of 1 is to 28 to, or almost 1 is to 29. As remember, we didn't catch the first entry. Take the second one and take the trade. So that's it for this first trade here. I will now focus more on the second trade, which is this one. I will now focus more on this. Now, after markets mitigated this one and more, and we broke this high, the next thing the market did is to come back to demand the discount zone, which is what you see here. So markets came into the demand here. Demand is, and look at what it did. The demand is very much visible in 15 minutes. So here just series of candles. So I'll remove this. So this is the demand that the market. The discount zone. After it broke this threshold, market when it rallied, it slowly came down. It took several hours. Slowly came down and it helped this inducement here. They mitigated this demand zone here. So after it mitigated it, we rallied to the upside. We are now bullish in the market. So for this second trade, we also stopped at this point here. This trend swing. So stopping there gave us a total of 1 is to 13 risk to reward ratio. 1 is to 13 risk to reward ratio. Now assuming we took the trade of the high time frame supply is here. So we're having a total of 1 is to 30. We drag it. We're having a total of 1 is to 30 for it. So that's it for this second analysis. This one is very simple. just change of character and mitigation. Second one, break of structure, what of interest mitigation and more. And we moved from there. But before we went up to this side, let me see what happened there. The aftermarket broke this high here. So came back and mitigated this and moved to the upside, became bullish. Then broke this high, came down again. Now there was a point of interest here. I mitigated from. So go to the higher time frame, see that point of interest. Before we come down and talk about what happened. Now this is the 1 hour time frame. I'll zoom into this place so you see it. Now looking at this zone, as you can see, markets came up to this side, left some of this movement, liquidity. It came down to this visible demand. Now after it came to this visible demand and it mitigated the 15 minutes refinement here. It was there that we took this in. Now we can see the candle to see where it looks like exactly. And look at that one I mentioned earlier. We did this one zone. You can see the candle here. Now this one too, it mitigated it. Now go to the lower 15 minutes to show what the entry was. This is the 15 minutes time frame. This is the 15 minutes time frame. So look at what that refinement is. You can see the exact candle here. You can see the exact candle. That's it. So it was this particular bearish candle we had before. Had this very impulsive move to the upside, and markets got this high, got this liquidity that is here, got this liquidity. Then slowly started coming down. Started to change the character here. Market came down. Then markets came down. This is that demand. Yeah, this is that demand refinement here. Go moving. So for that second one, our take off for the second trade is this high here, this international high here too. So for this second one, the trade is 1:13. Now that's it for that particular one. Also, assuming we extended it up to this high here, this high time, we left the trade. That's what I mean by extended it. So that it will be. The 1:40, 1:40 fixed to the reward ratio. 1:40 fixed to the reward ratio for this one. But instead, choose to stop here for the meta. The market was not sure. So for this third one here, we stopped at 1. So there's also another point of interest for this one. Assuming we took that, it still give us a good risk to reward ratio. That's this particular one. Here. Inside bar one. So assuming we took that, give us a total of 1:20. So like I mentioned earlier, we broke this high and came into this 1 hour demand. And we had change of character on the lower time frame. So we had a change of character, market came down, above this low, and broke this high. They did this inside lunch. This trade now is one mistake. Assuming we took it, we would have gotten. That's it. We'll not take that. We'll just sit that as rent confirmation. So we get the higher time frame. That's it. Now I'll focus more on this post trade here. Post trade is still something close to this one. For this. So I will go down to the 15 minute to a lower time frame, 5 minutes, show you what the chart goes. So this is the 5 minutes time frame. I'll zoom into that zone. So this is what the zone looks like. So I drew this thing here to explain, do this stuff here to explain what actually happened here. I will think I will get to remove this to see it clearly. So after mitigated this demand here, this refined demand here. So the next thing we did, we had a flip, choke plus flip. Now look at this. We broke this low, broke this low, broke this low. Now it was then this point. The market came up and mitigated this supply, but it failed to take it out. It came down and mitigated this 3 minutes. Sorry, market came up and mitigated this supply. It came down to mitigate it, failed to take it out. It came down to mitigate this demand. Then after it mitigated it, moved immediately, which about 3 candles, 1, 2, 3, took out this high. Then he left this clean demand zone here. Let me zoom in. He left this clean demand candle here. This very clean candle. Why it was upside. So later it came down after some, then used this imbalance as inducement to mitigate this clean demand zone. It will move. It moved and the trade profit was still that trend swing. So that was the take profit for this one. So, and this one is a total of 1:18 with the reward ratio. An example of what happened here now is just this thing. Up and point of interest mitigation. Up, it fails to break a high. A point of interest. Come down standard point of interest. Break high. Also, this comes down to a new demand. That's exactly what happened here. So from there, assuming we extended it to, we also have a good risk to reward ratio. Let's see. So for this one, what we had is 1:50, 56. I think earlier we had something. I think it's this one, yes. 1:56. Yeah, 1:56. Assuming we extended, we held to this upside since we've taken out this high. And it's very visible that this trend is very bullish. Assuming we held to that point, what we'll get is 1:56, which is the reward ratio. So that's it for this fourth trade. And we'll head over to the fourth and fifth one. Let me go to that. So now this is after we had this breaking and markets took out this trend swing high here. So markets came down to this. They left the demand here. So I'll talk more about that demand. Now let's zoom in. So after we had that change of character, chop plus flip created here, we rallied to the upside and took out this high and this trend. The market left the demand zone here. So it came down slowly. It took a couple of hours to get to that point. That's like 1 hour, so almost a day. Come down to this. Now it came down and it indicated this demand zone. It indicated immediately and took off. Our take profit for this one was also this high. So I will zoom into this before I continue about the take profit part. Let me go to a lower time frame. So this is it. This is the candle. And see this demand zone here. See this demand zone. So that was what the market indicated. So from the higher time frame, then I have to say something about this. From the higher time frame, markets this this um, sidebar point of interest, this sidebar demand, it is not within the higher time frame point of interest. Yes. So there's a difference between this inside bar and the other inside bar dimension. Now, let me go back to one of these. Now, if you look at this one and two, this is the high time frame demand. This is the high time frame demand. Now, markets, there's another point of interest inside it. An inside bar point of interest. Inside bar and that's the refinement. It is within this high 1 hour demand zone. Within the 1 hour demand. Now, I think there was another one that we looked into before go to this one. This one, no, it is not really. This one is not really inside bar. Not really inside, but it's within the demand is very visible. 10 minutes. So this one now, you can see this inside bar here. We have to understand that this inside bar is not within this demand zone. So it's just like more of like liquidity within resting inside that point of interest. Resting that point of interest. Assuming our point of interest is our point of interest on the 1 hour or on the 5 minutes or so covered this whole zone. This candle now, I would say that here now is our this inside now, but it is not. I'll go to the higher time to show you what the area looks like. Why there's no. Now this is it. To look at the particular candles here, which is this one. That's the particular candles. That point of interest have inside bar demand is not within it. So this is where the inside bar demand is. So that's it. So we took a trade from here and we moved up. So we took the trade from that for this one, from that point, and the take profit was giving us a total of 1 is to 8. That's correct. Giving us a total of 1 is to 8. Now, Jimmy also extended to this higher time frame times supply. We'll be getting a total of 1 is to 27. So you see it here, we'll get okay, not 1 is to 27, 1 is to 22. 1 is to 22. Very short. 1 is to 22. So as we extended it, we held the trade to that point. We're getting a total risk to reward ratio of 1 is to 22. So we'll have to go back. So this is it. We'll stop at this point, which is 1 is to 8. Now, continuing from there, market broke this side and came down and mitigated this demand. Demand zone here. Okay, let me go to the trade. So this is it on the 3 minutes. So I was expecting markets to come down to this clean demand zone here. This market to come down to this clean demand zone again. So what it did instead was to okay, after it broke this high, it left the demand here, broke this high, created this demand, broke this high, created this clean demand zone, created it and moved. Assuming you took this trade because I saw it earlier, so that's why I was able to mark it out and mark out this. Right. So assuming you took this one, here. So assuming you took that one, too confident that market is going to move this. So that trade would have been one is to 36, or let me say, let me check very well. Let's say 1 is to 35 risk to reward ratio. Assuming we took the trade here from this band zone. So we moved from here and we broke this high. Market came down to this and had an impulsive move to the upside. Now let's look into it. So here, I think let me go to a high. This is the 5 minutes time. There's an inside bar demand where market stop. Just from here, the market move. Actually, so it didn't even trigger. No, it did not trigger the exact zone. So assuming the whole zone is covered, this. But let's be realistic. It is quite difficult for anyone to have cut this, including me too. Quite difficult. So this is it for that trade. 1 is to 47. But because seeing this particular place refinement is and knowing to cover this high, it's quite difficult. So that's it. 1 is to 47. So I was expecting market after market broke this. So I was expecting market to come down this demand. But instead, what it did was to come down to this point at this low and mitigate this corner demand. And before it got down to that low, it did something. It had 2 trades here. It had a change of character here. It's very, very, very. It had a change of character. So, taking from that demand, it was 1 is to 8. But this Asian low, it was 1 is to 8. You remember you took this further inside bar demand. So how they change the character? How they change the character? Assuming you took the second one, it was 1 is to 17. So the other one is to 8. 1 is to 17. That's sharing the pullback. So okay, move from there. Get this 101 demand. 1 is to get the 101 demand. What it did is had a change of character. So I'll put down to the trim. So this is it. It also has to do with inside bar demand. So this is it. So you had a change of character here. Market mitigated this inside bar demand. This inside bar demand. That was what it mitigated and we moved. That happened yesterday. So this one gave us the 1 is to 14. 1 is to 14 risk to reward ratio. So that's it for all the trades. That's about 5 trades or so. 1, 2, 3, 4, 5, 6. So that was it for this case study. So I'll go to high time frame. Pictures. So going back to the high time, let's do last. Consider from here. This is 4 hours. So for here, for this trend, we've had a pullback today. Had a pullback to it. Now for this other one, as you can see on the chart, back to the discount zone. This whole trend. Now, also for this one, let's go with what happened in the international. We had a change of card. Now, market came down and we moved. The market came back to the discount for this one. And for this one too, market came into the discount. So since we're already in the discount here on the higher time frame, on the structure, also the discount on the discount on the internal trend, the internal trend in the market. That means we should be expecting change of chart at any time soon. They should be expecting a change of chart at any time soon. Down to this point, so that we can get this daily demand on here. So we either expect it. Okay, let me go to the daily time. So this is the daily time frame. As we have an inside over demand. So going to this daily time frame, we still have market mitigated this zone. So there are two things. Market might stop at this supply zone here and come down. Might go up to this demand zone here. Go up to this demand zone using all this place as so one of these two things. Either stop here just as should be according to this, or in this clean supply zone here, or it will rally up to this upside. This is whole place for this supply. Then we'll trade from here down to this place here. The other thing that happened is for it. So that's the 2 case scenario. That here. So that's it for this case study on GBPUSD. See you in the next case study.